Hello and welcome to myfinanceteacher.org. Merry Christmas everyone, and in this video I'm going to talk about natural gas. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Unfortunately, since early November, natural gas has really been a disappointment, and my personal entry is at about the price of $2.6. which gives me a loss of over 14.5% at the current prices. It's quite painful, but as I always mention, it's wise to use stop losses. My position used to be much bigger than it is right now. And after we broke the low of 19th of November, I reduced my position, of course, with some small losses, and a loss of over 14.5% is now applicable to a much smaller position. And moving forward, what's my outlook on natural gas? As I mentioned in my previous video, this period that I indicate with the blue area, including November, December, January and February, is usually when a spike in natural gas takes place. And we still have slightly more than half of this period left. So I am still cautiously optimistic on natural gas. Another thing I'm looking at, and remember this is only my opinion, there is no financial advice here. Natural gas has relatively recently broken below the low range of the Bollinger Bands. And usually once the price pokes through the lower range of the Bollinger Bands a few times, it takes a trip towards the upper range of those bands. Unfortunately, over the last week, it looks like natural gas is behaving with an indication that it might want to poke through the lower range again. And that is a concern, but as I mentioned, I stay cautiously optimistic. We've seen a similar thing happening in summer, which gave us an inverse head and shoulders, and a relatively similar thing here in October when prices poked through the lower range of the Bollinger Bands, continued lower after a short-term bounce, and again ended up with an inverse head and shoulders formation. Are we going to see again something similar? It's hard to say, but there is a possibility of that. So that's what I see on this relatively simple chart. Next, moving on to other indicators. Looking at RSI, 14-day RSI. Over the last month, RSI is recovering from a relatively low level of 39.5 at the end of November. Although that was not into oversold territory, which means there is still a chance gas prices might drop to bring RSI actually into oversold territory before a next rally can start. However, for now, this recovery in RSI looks promising, and I still keep my small position in natural gas. Next, looking at stochastics here, that's another indicator similar to RSI but somewhat smoother. As you see, whenever the stochastics are into oversold territory, that's generally the time to buy an asset, and whenever the stochastics are into overbought territory, that's the time to sell. About a month ago, stochastics were into oversold territory and also seem to be recovering at the moment. Although after a recovery, stochastics still can dip back into oversold territory as they did here in April this year. So although there is still risk on the market, as I mentioned, at the moment this recovery in stochastics is also promising. And talking about the risks, one interesting indicator in relation to that is this Parabolic Sar, these dots that you see on the chart. Whenever the dots that are above the price are broken through, that usually indicates a start of an upward trend in prices. Like here, for example, in summer this year, whenever these dots that were above the price were broken through, that was the beginning of this trend up. Whenever the dots that are below the price are broken through, that indicates the beginning of a trend down in prices. This indicator can also be used for risk mitigation. And if we see the price breaking through that line of dots over here, that could be one of your indicators for a stop loss. In that case, you'd throw in the towel and take the losses. Me personally, what I'm going to do, I'm going to talk about that near the end of the video. Another possible stop loss would be this recent low on the 9th of December. That gives us the prices of 216. If that low is broken, that also can indicate that it's time to exercise a stop loss. Currently the price is close to breaking below that Parabolic Sar below these dots of the Parabolic Sar. But as I mentioned, there is also a chance we're going to get this messy inverse head and shoulders. This idea of the inverse head and shoulders is based on this recovery in these oscillators. And lastly, another chart over here showing these relatively short-term cycles in natural gas, all the way since this significant crash in prices in 2014, 15 and 16. All the way since that crash, every couple of months cycle in natural gas at its top closed above the 50-day moving average, or at least recovered that 50-day moving average, with only one exception over here in March of 2018. So whether we have already seen the low for the short-term cycle at the beginning of December or not, even if I have to sell my position with a loss, I'm a little bit hesitant to do that at the moment, as we are still nearly 10.5% below the 50-day moving average. So even if the rest of winter doesn't actually give us much of a spike, I think you'd wish to consider trying to catch at least that mild top somewhat closer to 50-day moving average. However, of course, this 50-day moving average could also dip, and there are all these risks on the market. So moving on to my personal strategy versus a strategy that I would give to, say, someone I really cared about. Well, in my personal portfolio, since the position size is not too large, I'm going to hold until the end of winter in the hopes that the rest of winter might actually give us colder weather. I guess I will have to see about that. If I was giving a suggestion to someone, which it isn't, remember, this is not investment advice, this is just my opinion on the natural gas market, I would suggest people to protect their capital and consider a stop loss just below 2.2, probably at about 2.19 is one possibility. Another possibility is this recent low at the beginning of December, somewhere at about 2.16. If these lows are broken and you exercise the stop loss to protect your capital, you might have a chance to enter at the next support zone just above $2. So that is my opinion on natural gas. Whichever strategy you decide to stick to, I wish you good luck in your trades.